Precious matter. Estimating the total amount of gold in our solar system is challenging, as it depends on speculative models of planetary formation and the distribution of elements in celestial bodies. However, it's generally agreed that the vast majority of gold is found on Earth. As of March 2022, approximately 109,576 metric tons of gold have been mined throughout history. The amount of gold that is potentially available on Earth depends on technological advancements and the economic feasibility of extracting gold from lower-grade ores or unconventional sources. However, it's essential to note that there are significant environmental and economic challenges associated with extracting gold from such sources. Predicting the future price of gold involves considering a multitude of factors, and making precise predictions is inherently uncertain. Economic and political factors play crucial roles in influencing the price of gold. Here are some perspectives to consider. Economic perspective. Inflation hedge. Gold is often considered a hedge against inflation. If inflation is high, investors may turn to gold as a store of value. Interest rates. Changes in interest rates can impact the price of gold. When interest rates are low, the opportunity cost of holding gold decreases, making it relatively more attractive. Supply and demand. Economic factors affecting global supply and demand for gold, such as mining production, jewelry demand, and central bank purchases, can influence prices. Political perspective. Geopolitical uncertainty. Political instability, conflicts, and geopolitical tensions can drive investors to seek safe haven assets like gold. Government policies. Policies related to currency, trade, and monetary systems can impact the perceived value of gold. Formal perspective. Market analysis. Analysts often use technical and fundamental analysis to predict future price movements. This involves looking at historical price patterns, market trends, and economic indicators. Risk assessment. Gold prices can be influenced by various risks, including economic downturns, currency fluctuations, and global events. Assessing these risks is crucial for predicting future trends. 10-year prediction. Making a precise prediction for the gold price in 10 years is challenging. However, considering a scenario with a strong bull run and high inflation, it's plausible that the price of gold could rise significantly. Predictions would need to consider the specific economic and political conditions prevailing at that time. It's essential to note that investing always carries risks, and market conditions can change rapidly. Professional financial advice and thorough research are crucial for making informed investment decisions. Additionally, environmental and ethical considerations surrounding gold mining should be taken into account in any economic analysis. Considering the potential for gold as a global currency or reserve asset involves a broader perspective that includes aspects of international finance, digital assets, crypto and traditional monetary systems, and the role of precious metals. Here are key elements to consider. Historical role as a reserve asset. Gold has a long history as a store of value and a medium of exchange. Central banks and governments have held gold reserves to support the stability of their currencies. Diversification and stability. Gold is often considered a safe haven asset, especially during times of economic uncertainty. Its value tends to be less volatile compared to other assets, providing a stabilizing influence. Currency pegs and backing. Historically, some currencies were pegged to gold, meaning their value was directly tied to a specific quantity of gold. While the gold standard has largely been abandoned, discussions about returning to some form of commodity-backed currency occasionally arise. International monetary system. The potential for gold to play a role in the international monetary system would depend on global agreements and the willingness of nations to adopt a gold-backed system. This could involve the creation of a new global reserve currency or a return to a modified gold standard. Inflation hedge. Gold is often seen as a hedge against inflation. In periods of rising prices, the purchasing power of currencies may decline, but gold's value could potentially remain more stable. Central bank policies. The decisions and policies of major central banks, particularly regarding their gold reserves, can influence the perception of gold as a global currency. Central banks buying or selling gold can have a significant impact on its price and role in the international monetary system. Digital gold and cryptocurrencies. The emergence of digital gold concepts and cryptocurrencies, such as Bitcoin, adds an interesting dimension. While these are not physical commodities like gold, they share some characteristics, including a limited supply and perceived store of value. Global economic conditions. The overall state of the global economy, including trade balances, debt levels, and economic growth, can influence the attractiveness of gold as a global currency. Public perception and confidence. The confidence of individuals, investors, and governments in gold's ability to maintain value is crucial. Public perception plays a significant role in the success of any potential global currency, including one backed by gold. Environmental and ethical considerations. As concerns about environmental and ethical practices in mining increase, any move towards a global currency backed by gold would need to address these considerations to ensure sustainability and ethical standards. The potential for gold to play a significant role in the global currency system depends on a complex interplay of economic, political, and social factors. While gold has enduring qualities that make it attractive, any shift towards a new global monetary system would require extensive international cooperation and agreement. Additionally, the rise of digital assets and changing attitudes toward traditional forms of currency add layers of complexity to these considerations.